Well, I'll tell you what, guys. It seems to me it's pretty official now. We have entered into a bear market. The markets, everything is switched around, and the bull is over, I think. Well, it might come back a little bit, and it might over the next month or two, but if it does, it's only going to lead to a bigger crash. So, I mean, even if it made new highs, it would only lead to a bigger crash, because the whole thing is turning over. That's what it's basically doing. So I'm going to read to you a little bit of Jim Rogers here. He says, the next bear market will be the worst in my lifetime. For months now, Jim Rogers has been talking to anybody who will care to listen about the coming equity crash, which he said would be the worst in his lifetime. And he is a pretty spry 75-year-old. I'll tell you, I've seen, he is pretty spry. I seen him, he's on that exercise bike all the time. He's just panting and puffing, and he's just going at it, you know, and you think he's going to give himself a heart attack, but no, he won't give himself a heart attack. He's as tough as nails, this guy, you know. He must get his heart rate up to about 200 beats a minute, you know, on that bike, and it doesn't bother him any, you know. He's something. He's tough as nails. Anyway, today, in his latest pessimistic prognostication, the co-founder of George Soros Quantum Fund told Bloomberg that the fact that the total U.S. debt pile has only increased since the financial crisis threatens to upend stocks, and that he believes that the current turmoil will continue until Jerome Powell and company hikes rates next month. Or, alternatively, it could just make the crash that much worse as volatility surges, and investors in certainly high-risk volatility-linked products have seen all of their savings wiped out. The new Fed chair could rethink a hike for fears of exacerbating the sell-off. Well, I don't think the Fed's going to rethink anything. I think they're too stupid. Well, it's not so much that they're too stupid. I think it's all part of their plan, actually. The thing is this is a long-term plan of theirs, that they want to bring this on, because then what they can do is, then after it hits, then they can cry the sky is falling like Chicken Little. They can claim the sky is falling, and then they can get what they did in 2008, same thing all over again. They can get a new Henry Paulson to come in, and they can open up the floodgates of money, and they can enrich all their banker buddies all over again. Didn't they have a party last time, you know? Didn't they really enjoy, they had so much money flowing around that they had Ben Bernanke in, and they asked him where like $500 billion went. And he just said, well, no, I'm not going to tell you. I mean, they're just stuffing money under their mattresses, stuffing money wherever they could stuff it. You know, they had more money than they knew what to do with. It says, and this is what Jim Rogers goes on to say. He says, when we have a bear market again, and we are going to have a bear market, it will be the worst in our lifetimes, Rogers said. Debt is everywhere, and it is much, much higher now. Rogers has seen severe bear markets, including the most recent crash when the Dow plunged more than 50% during the financial crisis, from a peak in October 2007 through a low in March 2009. It sank 38% from its high during the IT bubble in 2000, through a low of 2002. Jim has been talking about severe corrections ever since I started in business over 30 years ago, said Alibaba Group President Mike Evans, a former Goldman Sachs Group Incorporated banker. So I'm sure he'll be right at some point. Okay, so now we know the magnitude. We just don't know the timing. Why not also give a time frame for this next epic market crash? Simple, Rogers admits. He is terrible at timing sell-offs, which, of course, is just as important as getting the event right. I'm very bad in market timing, Rogers said. But maybe there will be a continued sloppiness until March when they raise interest rates, and it will look like the market will rally. You know, this is my first opinion. My first feeling was that this is actually what will happen. Exactly what he's saying here. That there will be a continued sloppiness. In other words, kind of a up, down, whatever. Not really a crash, but sort of a correction and then sloppiness until March. Right? When they raise interest rates. and then it looks like the market will rally some. And then when they come in April with this an extra 10 billion on top of what they're already doing, which is 20 billion, so we see 30 billion, right, in sales of their toxic balance sheet in this reverse quantitative easing. What'll happen then is I think everything's going to turn over. I think the markets are going to turn over, and that's when we're really going to get the big crash. That's what I think all along. Now, I thought that we could get a little bit of a recovery until then, and then the big crash this way comes. Now, it's possible that we could get the crash before then, but I don't think we're going to get past that 30%, not 30%, but $30 billion hike that they do every month during that time. So listen, thank you guys for listening. Like and subscribe, and we'll catch you in the next show.